Welcome to the Deep Dive. It is Tuesday, January 13th, 2026, and it feels like the entire world is gearing up for what might be the biggest business trip of the year.
That's right. Next week, the 56th annual meeting of the World Economic Forum kicks off in Davos.
And for you, whether you're, tracking global markets or just trying to figure out where investment money is going to flow in this new climate, this is, well, it's way more than just a fancy summit.
Oh, absolutely.
So our mission today is to really tear apart this strategic report we've got in front of us. It's a deep analysis of the market and political landscape, and we're going to try and settle that central question we've been hearing.
Which is?
Is Davos still necessary? I mean, is it a relevant forum for solving global problems, or has it just become, a high-profile photo op for world leaders?
And the sources we have, they get right to the heart of that tension. The official theme for Davos 2026 is, get this, a spirit of dialogue.
Right, trying to project that idea of cooperation, of continuity.
Exactly. Yet the report concludes that what we are actually seeing is the seismic epicenter of a global reconfiguration. And it's defined not by consensus, but by deep fracture and strategic competition.
Okay, let's unpack that. Because the analysis suggests we're not looking at one conference, we're looking at two, running in parallel.
That's a great way to put it. The first one is the official one, happening inside the Congress Center, the usual agenda, cooperation, AI, ethics, climate sustainability. That's the public story.
And the second one?
The second one is where the real action is. It holds far greater strategic importance, and it's all happening in the margins.
So private meetings.
Intensive private bilateral meetings, and critically, this privately organized USA House. These are the spaces, and they're often deliberately outside the main security perimeter where the real power shifts are happening.
So let's jump straight into that fracture then. It feels like the era of that technocratic consensus where global elites all gathered to agree on solutions, that's over. What's replacing it?
Well, what's so fascinating here is the complete philosophical shift. The dynamic has swung hard toward what the report calls sovereign forces.
Meaning leaders and governments that are rejecting that old consensus.
Precisely.
Yeah.
They're prioritizing national sovereignty, specific domestic economic goals, over those collective global objectives like climate redistribution or heavy regulation.
It's a really clean ideological break, and our report maps it out visually. On one side, you have the globalists, the interventionism progressive bloc.
The usual suspects, Klaus Schwab, Ursula von der Leyen, Pedro Sanchez, Antonio Guterres. They represent that desire to solve global problems through, centralized coordination.
And on the other side,
then you have this rapidly rising sovereignty and freedom bloc. They're all about radical free markets and conservative governance. This includes the new U.S. administration, Argentina's Javier Milei, Giorgia Meloni from Italy, and Viktor Orban from Hungary.
And their principles are pretty clear. Aggressive deregulation, strategic protectionism, that America First playbook, and just maximizing national economic freedom.
Exactly.
And the biggest disruptor, the thing that really makes Davos 2026 an inflection point, has to be the U.S. delegation.
Oh, without a doubt.
Yeah.
Sheer size and agenda. President Donald Trump's confirmed attendance, leading the largest U.S. delegation ever recorded. We're talking Secretary of State Marco Rubio, Treasury Secretary Scott Bessent, Commerce Secretary Howard Lutnick. This is not a sign of reconciliation.
No, it's a statement.
It's an intentional high visibility, a notification of a change of regime. The U.S. isn't coming to compromise. It's coming to project power and actively rewrite the global economic rules.
And the clearest signal of that is the USA House. Tell us more about that, because it sounds like more than just a branding exercise. It sounds like a rival embassy.
It functions exactly like a parallel commercial embassy.
Okay.
They set it up outside the official security zone, which, gives them freedom from the WEF's agenda constraints.
So they can talk about whatever they want.
And they are. They're using that space to host high-level discussions on aggressive deregulation, the push for U.S. digital asset supremacy, all the things the WEF establishment would rather control or regulate away. They completely control the narrative there.
So they're using Davos's own gravity to pull people in, but on their own terms.
Precisely.
Speaking of successful disruptors, Javier Milei from Argentina is coming back as a kind of validated model for this movement.
That validation is absolutely key. He's not just a firebrand this time. He has tangible economic metrics to back up his policies.
And those metrics are pretty stunning.
For a country with Argentina's history of hyperinflation, achieving single-digit monthly inflation is monumental. And even more critically, he delivered the country's first annual budget surplus since 2009. That gives him enormous credibility.
So what's his agenda this time? He sounds like he's on the offensive.
He is. It's twofold. Financially, he's meeting with the IMF's Kristalina Georgieva. He wants new disbursements to lift the remaining currency controls, which could unlock massive capital flows.
And then the other part.
Technologically, his meeting with Elon Musk is about securing huge investments in lithium and tech. He's positioning Argentina as a regulatory safe harbor, an AI and crypto refuge against growing restrictions from the EU. He's trying to build a global alliance of free nations.
Meanwhile, Europe seems caught in the middle.
They are. And Italy's Giorgia Meloni is the pivotal figure here. She's seen as the respectable conservative who can bridge the gap between traditional Europe and the new Trump administration. Her focus is very pragmatic: security, energy, national sovereignty.
But the real stress test for Europe has to be Ukraine, right? With President Zelensky there, it forces a tough question.
A very tough question. Do they have the political will and, more importantly, the fiscal capacity to keep up the war effort if the U.S. changes its commitment? The pressure is on.
And while all this is happening, India is playing its own game.
A very clever game. They're positioning themselves as the stable China plus one manufacturing alternative, arguing their low exposure to direct U.S. exports insulates them from any trade shocks.
Which brings us directly to Wall Street. Because despite all this chaos we've just described, the big U.S. investment banks seem surprisingly optimistic.
They're not just optimistic, they're bullish. The consensus for U.S. equities in 2026 is robust. Goldman Sachs is constructive. Morgan Stanley sees a re-acceleration of growth for the S&P 500.
So what's driving that confidence?
It all comes down to one idea: U.S. exceptionalism. It's driven entirely by anticipated policy. The reports all predict that corporate tax cuts and aggressive deregulation will be a massive tailwind for corporate earnings.
And central to that exceptionalism is the AI revolution. But the focus is shifting, isn't it? It's moving beyond just generative AI.
That's right. The new buzzword, the one that matters for investors, is agentic AI.
Okay, define that for us. What's the real difference?
It's simple, really. Generative AI writes the email for you. Agentic AI acts on its own. These are autonomous systems designed not just to process information, but to execute decisions, to negotiate, to take actions in the real world. There's a difference between a smart tool and an autonomous decision maker.
And that's where the market sees the real money.
Exactly. Goldman Sachs estimates that this kind of AI has the potential to automate up to 26% of labor tasks in key sectors. So the market isn't just betting on cool tech, it's betting on a structural, long-term increase in profit margins.
So if that's the thesis, what sectors are the big favorites right now?
We're seeing a clear rotation. Cyclical stocks, defense, traditional energy, all aligning with the new administration's priorities. And crucially, financials are a major favorite.
Why financials?
They benefit from what's called a steeper yield curve, which is what you expect with higher fiscal deficits.
For our listeners who aren't bond traders, break that down. Why is a steep yield curve good for banks?
In simple terms, banks make money borrowing short-term and lending long-term, like for mortgages. A steep curve means the gap between those rates is wide, so their profit margins get much fatter.
Got it. Though I see JP Morgan adds a note of caution here.
They do. They talk about the promise and pressure of AI, warning about high valuations and market concentration. It's not a straight lineup.
This sets the stage perfectly for where investment portfolios need to focus. But before we get to the actionable playbook, let's take a quick break. If you are enjoying this deep dive, we invite you to subscribe, leave a like, and comment on topics you'd like us to cover next.
And in the description of this deep dive, you will find the link to PayPal if you want to support this project.
Your contribution greatly helps us continue making content like this. We don't ask for more than the cost of a cup of coffee. Thank you for your support. Welcome back. Let's talk about the actionable items for your portfolio. The digital asset space specifically is seeing what the source report calls a Copernican shift at Davos this year.
It's a massive change.
Yeah.
For years, the WEF pushed for central bank digital currencies, CBDCs, state-controlled digital cash. That focus is now, well, it's dead in the water, mostly because of political resistance in the U.S.
So what's replacing it?
The new focus, heavily promoted through events at the USA House, is on private stablecoins like USDC and USDT, and on decentralized finance, or DeFi.
It's a move away from state control toward private, compliant infrastructure.
Which suggests real institutional validation is coming. It favors assets like Bitcoin and DeFi protocols that can meet those clearer compliance standards. It's moving from a fringe concern to a key component of the new financial architecture.
But we have to talk about the risks, the elephant in the room that could derail this whole bullish view.
There are two big ones. First is inflation and the Fed. Bond investors are already getting very nervous. You can see it in rising long-term yields.
Because they expect huge fiscal deficits from the new administration's policies, right? The government will be borrowing a lot of money.
Exactly. And more government borrowing could reignite inflation, which might force the Fed to keep interest rates high for much longer than anyone expects. That's a real risk.
And the second risk?
Tariffs. The universal tariffs proposal. Analysts like Oliver Wyman call it a double-edged sword.
Because while they might protect some industries, they're basically a tax on consumers.
A direct tax. They could immediately reverse all the progress the Fed has made on prices, forcing everyone to pay more for goods.
This is where we need to cut through the political noise. And that's why this report leans so heavily on prediction markets like Polymarket and Kalshi.
They are the quantitative oracle. They give you numerical probabilities that cut through all the speeches and diplomacy. And what they're saying about tariffs is fascinating.
They're skeptical.
Extremely skeptical. The market tracking the legal viability of Trump's universal tariffs. The probability for Supreme Court approval is hovering between just 25 and 32%.
Wow. So the market just doesn't buy the full-scale trade war rhetoric.
Not at all. It's pricing in huge institutional obstacles, legal chaos, probably leading to a more moderate policy like surgical tariffs on specific goods, not a global conflict.
So it's pricing in the uncertainty of execution.
Precisely. And these markets track other things too, like cabinet turnover, which adds a risk premium to policy stability. They even track geopolitical hotspots, assigning probabilities to truly provocative events.
Like what?
Well, the report cites one data point. The probability of the U.S. acquiring Greenland is tracked at only 5%. It's a good indicator that the market mostly ignores the most extreme rhetoric.
Which brings us back to the core truth of this deep dive. Davos 2026 isn't a forum for consensus.
No, it's a mechanism of price discovery for a fragmented world. It's a world defined by realism and competition.
So for you as an investor, the strategy has to be aligning your portfolio with the priorities of this ascendant power block.
That's it. You have to favor sectors like AI and semiconductors, defense, and traditional energy. That's where the political tailwinds are strongest.
And the final recommendation seems to be a shift in mindset. You have to abandon that old idea of optimal global efficiency.
That idea is gone. The new framework demands redundancy and security in your supply chains. That principle of friendshoring moving production to politically aligned nations, even if it costs a bit more.
And digital assets deserve a fresh look as part of that modern portfolio.
Absolutely. But let me leave you with a final provocative thought based on the report's conclusion. The source says, what happens on the main stage of Davos is theater. The real action is in the margins.
Right.
So think about this. If the market's cold, hard expectation, the data from Polymarket already undercuts a politician's most aggressive rhetoric on tariffs. What's the true risk you face? Is it the policies leaders actually announce? Or is it the pervasive policy uncertainty they create just by showing up and performing for the cameras?
That is definitely something to think about as this all unfolds. And with that, we come to the end of today's deep dive. We hope you liked it, learned something new, and that you'll join us for the next one.
Thank you very much for tuning in.
If you enjoyed the analysis, please subscribe and check the description for details on how you can support our work. We'll see you very soon.